What's up, money magnets and master traders? It's your Uncle Charters. We had a little bit of a red day today for the S&P 500. It didn't really go anywhere. Bulls did manage to avoid a breakdown of the 635.5 level. We recaptured that level or cleared that level last Friday. Today we treat it like support. It was pretty ugly price action in my opinion. Starting off during the day, it was just pretty much choppy. Tested my 637 level as support. Eventually it broke down right there. 15-minute candle closed below, but unfortunately for the bears, there was no love for them in the morning. There was a recapture there, false breakdown setup where we closed back above the 637 level. From there we treated 637 as support, bounced and hit 638.5. Now today, intraday, I was watching the 30-minute chart. Watching the 30-minute chart, the bigger time frame, you're gonna see less setups. So when I was watching this, it looked like it just rejected from my 638.5 level after the recapture. So it was good for a level to level move and then it rejected. But when you go down to the 15-minute chart, which I missed this, I will admit I missed this setup. We cleared 638.5 on the 15-minute chart, and then we had a false breakdown setup where we closed back below it right here on the 1230 candle. So I missed that false breakout setup because I was watching the 630 chart. But once we had the breakdown of 637 where it closed below my 637 level once again on the 30-minute chart, it was able to go down and hit the 635 level. Did go a little bit lower than 635, but that was pretty much it. Keep in mind, these are all alerted in the Discord and Uncle Charters' group for the sheep's den. I call it the sheep's den. But overall though, not much of a move. However, we do have CPI tomorrow. You know, I like to think that on the days of these data days, we get lots of big moves. You know, back in 2021 and 2022, that's exactly what was happening. It was beautiful. But you look at FOMC, for example, we did get some decent moves around FOMC, but the bigger moves didn't come until after the data release. So we'll see what happens. CPI gets released in the morning, 8:30 a.m. Eastern time. We'll see if it can draw some volatility for the intraday action. So fingers crossed that something crazy happens tomorrow. But as I mentioned earlier in the video, SPY didn't break down the 635.5 level. It didn't really take out any critical levels, and the critical levels are still pretty much the same. 635.5 is the support, but then we also have 634, 632, 630, and 628.5 below. These are fib levels and previous sell zones and buy zones. So if we break down those levels, if we break down the levels it couldn't do today, and you know, maybe we can get some double top or some pullback action going. But I can't, like I usually say in my videos, I can't get bearish unless we start getting below that 5 daily moving average. And I mentioned almost just about every recapture, every false breakdown of the 5 daily moving average has been pretty bullish. And the last false breakdown we have of the 5 daily moving average was right here. This was back in August 6th, and so far it's been playing out once again. But if we are to get to new all-time highs, 638 and 640 are still the levels that must clear, must stay above 635.5. so we got the bear case, we have the bull case. There's a big chance we're likely going to gap up or gap down tomorrow due to CPI. If that happens, just remember the levels that I gave you guys. If we start breaking down the 5 daily moving average, getting below 630 is 628.5. I also have 627, 624, 621, and 619-ish to the downside. And above 640, I have 643, 644.7, 646, and 647.7 with 650 above. So if you guys could add those levels to your charts, that way you'll have Uncle's levels and we'll be able to somewhat see the same charts together tomorrow. Moving on to QQQ, I want to change my pivot levels today for QQQ, so I'm going to get rid of that one. I'm going to get my fib levels. I'm going to start off at July 35th's high, and I'll bring it down to August 1st's low. So the pivot high was at 574.63, and then the pivot low was at 551.68. Now we have some new pivot levels to watch, and I have for resistance at 573 and 574.6. If those levels can clear, it's a good chance up to 576, 578, and 580. That's the next fib extension level that I have. Those levels will be in play. If we are going to continue to pull back, because today was technically a red day, a lower close than last Friday, and if we are to continue to pull back, 571 and 569.7 are the next levels to watch. 569.7 being the new Fibonacci level that we got here. It also aligns right around my 5 DMA. The 5 DMA will likely slope slope up to that level tomorrow. So definitely watch it. It'll also break down this uptrend line that I have, and we can take out that support level. Now with CPI, we likely get a gap up or a gap down. If we gap below 569.7, that could look very bearish. Below it would be bearish. 568, 565.8, 563 or lower would be in play. Here is NVDA. Unfortunately, we had an inside candle setup for NVDA, and the setup did not trigger today. It stayed pretty much choppy. It did bounce off the 5 DMA, but didn't really go anywhere. Resistance is still at 184. It's a tough resistance at that around that 184 area. If it clears tomorrow or gap above it, that would be very bullish for NVDA. New records incoming, new highs incoming. But if we break down 182 and 180, I would be bearish. Even if we get a gap below it, 178, 176.7 would be targets of mine, and I think there's a great chance that we would drop a lot lower than those levels. Below 180, we could drop another $10 to $15 to the downside. I would not be surprised. Tesla looked very bullish, came very close to hitting the next fib level that I had. It was at 347.5ish. Very close to hitting it, but it didn't. But very volatile. I love this ticker symbol. If you can handle it, you can make a lot of money from this. But as of right now, I have support at 339, 337, and 335. If those levels can break down, especially 335 and 333, it would send us and put us back below this green trend line, and bears need a false breakout setup. So if you get that false breakout setup, break it down 333, that would put the lower targets in play. Below 335.5, I would definitely be bearish. So if we start breaking down support levels, 337, 335, 333, and then the fib level at 331.5, we breaking down those levels, we are bearish. Below 333 is false breakout mode. That's the level that you definitely want to be bearish if we break it down. Now from here, 339, 341 are resistant level. We break out those levels up to 346, and the net fib level at 347.5 would be targets of mine with 349 plus above. So we have the levels. Let's see what the price action gives us. Here is coin. Terrible action lately, terrible action. But a few things I want you guys to notice. Notice this pivot low here, how we broke it down. That level was right around 334, and we broke it down here. That's back in August 1st. Today, we back tested it as a resistance. So overall, even though it was a higher close than last week, it was overall price action still bearish. From here, I have support at 318 and 313. If those two support levels fail, down to 309, 307.8, and 306 or much lower, we go. And I do think we go way back below the 300 level on the next drop. Now, for me to cancel my bearishness, I need to see this breakdown and this back test be invalidated. That level is based off of the 334 level. So I know it's a ways away, but this is a very volatile ticker symbol. If you ask me, what would I need to see clear to be bullish again? I need to see 334 clear. I also need to see 338 clear. Because if those two levels can clear, it'll invalidate the breakdown and break out this downtrend line. So above 334 and 338 is when I would be bullish on coin again. And coin has a lot of room to go up. It will be incredible. IWM just chopping sideways, but overall to me is looking bearish. Now I want you guys to watch the 219 level. If it breaks down or gap below it tomorrow, Unco is bearish, and bears follow through would be to break down 217 to put much lower targets in play. Down to 213 and 209 would definitely be a possibility. If we are to get bullish, I need to see support at 220.6 and 221.8 clear to put 223, 224.4 and 226 plus back in play. Above 220.4, I would be bull bias on IWM once again. And below 219, I would be bear bias on IWM. Right now, it's chopping a bit. And here is the VIX. It's been breaking down and looking bearish, but it looks like it wants to bounce again. Interesting, the day right before CPI, it wants to show us that volatility is returning, and I'm hoping that's the case. But either way, we do have an inside candle setup with the mother candles high at 1652. If we're above it, based on that setup, that is bullish. Recapturing 17.5 and 18.6 would be very bullish for VIX as well. If we stay below 16.5, no bullish breakdown, and the low of the mother candles at 15.15. So if we break down that level, that would definitely be bearish follow through for VIX, which means volatility is not going to be good. But either way, no matter what happens in this 3D world, no matter what happens in the stock market, mindset is everything, and what is in your heart is real. You just haven't aligned with it yet. And to do that, you must always remember that you are a money magnet, that you are already a master trader. Everything you ever wanted, you don't even want it no no more. Why? Because you already have it. And in this life, you don't get what you want. You get what you embody. You get what you believe. So no matter what happens, believe that you are a money magnet. Peace.